Welcome to The Explainer. Today, we're taking something that honestly might sound a little intimidating at first, a dense 171-page table of contents for the Income Tax Act of Bhutan 2025, and we're going to transform it into a clear, structured roadmap. If you've ever wondered how a modern nation actually structures its financial lifeblood, well, you are absolutely in the right place. So let's just dive right in. We're going to decode the architecture of this legislation and see exactly how it's built from the ground up. Right out of the gate, we need to remember where all this begins. The official seal of the Parliament of Bhutan is this really striking emblem, and it serves as a powerful reminder that we aren't just looking at, some random financial guidelines today. We are diving into foundational official state legislation. This document represents the sovereign law of the land, carefully debated and drafted to guide the nation's entire economic future. To make this massive 171-page document easy to digest, we've organized it into 6 logical buckets: the legislative foundation, defining income and deductions, who is affected, international and anti-avoidance rules, compliance and appeals, and finally, driving economic growth. All right, kicking things off with bucket number 1, laying the legislative foundation. This is the baseline of the Act. We're going to start by looking closely at Chapters 1 and 2. These establish the preliminary rules, the extent of the law, and the fundamental imposition of income tax itself. What's immediately striking about this is the dual presentation of the text. It's beautifully bilingual, presented in both Dzongkha and English side by side. In fact, if you look all the way ahead to Chapter 21 of the Act, it explicitly addresses official languages and authoritative texts. And, this structure isn't just for aesthetics. It ensures absolute legal clarity for all citizens and stakeholders, which really reflects Bhutan's deep respect for its cultural heritage, right alongside its active engagement with the global financial system. Moving right along to Section 2, defining income and deductions, the core financial mechanics. Here, we're exploring Chapters 3, 4, and 5 to answer pretty much the most crucial question in any tax code: what exactly is being taxed and what can be written off? Chapter 3 breaks this down with remarkable clarity into 4 very distinct categories: income from employment, business, investment, and other sources. By strictly categorizing income streams this way, the Act ensures that, whether you're earning a monthly salary, running a local shop, or collecting dividends from investments, there is a clear, specific framework for how your revenue is assessed. Okay, but how do you actually calculate the numbers that fall into those buckets? Well, Chapter 5 demystifies the financial jargon by laying out the acceptable methods of accounting. It contrasts cash basis accounting, which basically means recording revenue and expenses only when money actually changes hands, against accrual basis accounting. That's when you record them when they're earned or incurred, regardless of when the cash actually hits your bank account. By explicitly defining these rules, the Act ensures standardization and fairness across the board. So the key takeaway here is that the rules of the game are locked in before anyone even starts calculating. Section 3. Who is affected? Let's look at the entities and the specific rules. Now that we know what's being taxed, we turn to Chapters 7 and 8 to clarify who is actually doing the paying. Chapter 7 is incredibly comprehensive. It covers individuals, partnerships, trusts, bodies of persons, and companies. But hold on, look closely at that first point. The Act specifically includes provisions for a parented child tax credit for individuals. That is a fascinating detail. It really shows that the tax code isn't just some cold financial tool. It's actively being used as a mechanism for social policy, supporting families right within the framework of national revenue. Now, a one-size-fits-all approach doesn't really work for complex sectors, right? The drafters definitely recognize that. Chapter 8 carves out highly specific rules for specialized industries. You've got targeted regulations for financial institutions, specifically banking, and separate rules for insurance entities, which are split even further into general and life insurance. This laser focus ensures total fairness and precision in sectors where your standard accounting rules might just fall short. All right, on to Section 4, international and anti-avoidance rules. This is all about safeguarding the system. Let's be real. Any modern tax system needs strong defenses. Chapters 9 and 10 are essentially the shields protecting the nation's tax base from evasion. Chapter 10 introduces something called the GAR, or the General Anti-Avoidance Rule. This is a broad legal mechanism designed specifically to prevent taxpayers from exploiting loopholes. What this means in practice is that even if some clever accountant finds a way to comply with the strict letter of the law while entirely violating the spirit of it to dodge taxes, the government has the overarching legal authority to step in and say, nope, that's avoidance. It's absolutely crucial for maintaining a fair system. And they aren't just closing domestic loopholes either. Chapter 9 modernizes the legislation to handle globalized business. It tackles incredibly complex international challenges, things like transfer pricing, hybrid mismatches, and double taxation agreements. By building in these provisions, Bhutan is ensuring its tax code is fully equipped to handle modern, cross-border economic realities, and it prevents international income splitting from undermining their own domestic revenue. Section 5, Compliance, Appeals, and Procedures. Let's walk through the actual taxpayer journey. So, how do you, as a person or a business, actually interact with this massive system day to day? Well, everything begins in Chapter 12 with the TPN, your taxpayer number. This is your unique identity within the whole system. The Act outlines the exact procedures for applying for it, how you have to use it on your documents, and even the rules for canceling it. It is literally the key that unlocks your entire interaction with the revenue authorities. And once you have your TPN, you enter the legal life cycle mapped out in these chapters. Step 1, you file your tax return, which is detailed in Chapter 13. Step 2, also in Chapter 13, you receive an assessment. Now, this could be a self-assessment or a default assessment from the state. But what if you disagree with their numbers? Well, Step 3, Chapter 15 gives you a formal, structured path to file a notice of objection or even apply to a review board. So there's a clear, step-by-step ladder ensuring transparency at every single stage. Now, what makes a tax system actually function is a very delicate balance of power, and we see this perfectly illustrated in Chapters 18 and 20. On one hand, the tax department has strong enforcement powers. They have the legal power to enter and search and formally request information. But on the flip side, the state is obligated to provide clarity to the taxpayer through binding public rulings and private rulings. If you have a highly complex transaction, you can literally ask for a ruling, and the government's answer is legally binding. That protects you from future penalties as long as you follow their advice. It's a two-way street. However, if compliance completely fails, Chapter 16 outlines the strict collection and recovery tools available to the state. And honestly, these are serious. We're talking about distress proceedings, the temporary closure of business premises, and even departure prohibitions. That literally means legally preventing an individual from leaving the country if they have significant unpaid tax debts. So the system gives you plenty of opportunities to appeal, but make no mistake, it also has teeth.
Finally, Section 6. Driving economic growth, the ultimate goal.
We've spent this whole explainer deep in the weeds, looking at granular rules, deductions, and enforcement mechanisms, but it's so important to step back and ask, why do we even have these 171 pages in the first place? The answer is found right at the very end of the source text, stated loud and clear. The ultimate national objective of this complex architecture is that it supports economic growth, progress, and prosperity. Every single rule, every anti-avoidance measure, every taxpayer number, they're all just bricks laid to build a stable financial foundation for the country. It leaves us with a really compelling thought to chew on. A tax code is so often viewed as just a burden, but when it's structured effectively and fairly, is it actually the most vital blueprint for a nation's future success? Thanks so much for joining me for this explainer. Keep learning, keep questioning, and I'll see you next time.